How did a newspaper delivery boy from Nebraska become one of the world's wealthiest and most respected investors? This is the question that sparks our journey into the life of Warren Buffett, colloquially known as the Oracle of Omaha. Brought to you by Millionaire Secrets. In the heartland of America, Omaha, Nebraska, our story begins. Born in 1930 amidst the turmoil of the Great Depression, Warren Buffett was not exactly a child of privilege. Yet, from an early age, he displayed an uncanny interest in business and finance. As a young boy, Buffett didn't play with toys or frolic in the fields like other children. Instead, he was busy selling chewing gum and Coca-Cola bottles to his neighbors. Even then, he seemed to have a knack for turning a profit. But it wasn't just about making money, it was about understanding the value of money and how it could be grown. In his early teenage years, Buffett took on the role of a newspaper delivery boy. He would wake up before dawn, pick up the stacks of newspapers, and deliver them to his customers' doorsteps. It was during these pre-dawn hours, as he navigated the silent streets of Omaha, that Buffett began to understand the value of hard work, persistence, and dedication. But Warren Buffett was not content with just delivering newspapers. He saved every penny he earned, and soon, he began investing in stocks. By the time he was 11, he had bought his first shares in a company, marking the beginning of a lifelong journey into investing. Through his childhood ventures, Buffett laid the foundation for his future success. He learned the value of money, the importance of hard work, and the power of investing. He was not born into wealth or privilege. He did not inherit a fortune or stumble upon a gold mine. Instead, he built his wealth, brick by brick, through a lifetime of wise decisions and relentless dedication. So, what brought Warren Buffett to Wall Street? Well, the answer lies in his early years. Born in Omaha, Nebraska, Buffett's intrigue for business and investment was apparent from a tender age. His academic journey began at the University of Nebraska, where he completed his undergraduate studies. However, Buffett's real turning point came when he enrolled in Columbia Business School. At Columbia, Buffett was fortunate to cross paths with Benjamin Graham, often regarded as the father of value investing. Graham's teachings resonated deeply with Buffett. He absorbed the principles of investing not on speculation, but on solid performance measures and intrinsic value. This philosophy would go on to shape Buffett's investment strategy throughout his career. After Columbia, Buffett returned to Omaha and began his career as a stockbroker. But he had a thirst for more than just dealing in stocks. He wanted to create something of his own, and so he did. In the mid-50s, Buffett established the Buffett Partnership Limited. It was his first venture into managing investments, and it laid the groundwork for his future successes. The partnership started small, but Buffett's shrewd investment strategies soon saw it grow exponentially. He applied the principles he'd learned from Graham, investing in companies he believed were undervalued. His approach was patient and methodical, and it paid off. The partnership's success gave Buffett the platform he needed to make his mark on Wall Street. But Buffett's journey wasn't a straight path. There were bumps along the way, and he faced his share of challenges. Yet, Buffett remained focused and committed to his principles. He learned from his failures and used them to refine his strategies. And in doing so, he proved that success in Wall Street didn't have to come from speculation and risk. It could come from patience, analysis, and a deep understanding of value. But how did Warren Buffett come to control the multi-billion-dollar conglomerate known as Berkshire Hathaway? Let's take a step back to the early 60s. Berkshire Hathaway was then a struggling textile company based in New England. It was on the brink of closure, with its stocks plummeting. Enter Warren Buffett, a man with a keen eye for undervalued companies that held great potential. Buffett started buying stocks in Berkshire Hathaway in 1962. He recognized that despite its financial difficulties, the company had a solid asset base that could be leveraged. By 1964, Buffett was the largest shareholder, and he could have sold his shares for a tidy profit when the company offered to buy him out. But there was a catch. The company tried to shortchange him by offering a slightly lower price than agreed. This didn't sit well with Buffett. In a move that was part retaliation, part strategic investment, Buffett bought enough shares to take control of the company. He then fired the man who had tried to undercut him. It was a bold move, but it marked the beginning of a transformation. Over time, Buffett shifted the focus of Berkshire Hathaway from textiles to investments. He used it as a holding company to invest in a diverse range of businesses, from insurance to candy manufacturing. Buffett's investment philosophy was simple: buy companies with strong fundamentals and hold on to them for the long term. By the late 70s, Berkshire Hathaway's stock price had skyrocketed. It was clear that Buffett's strategy was working. He had turned a struggling textile company into a powerhouse of wealth creation. And here's the interesting part. Despite its massive growth, Berkshire Hathaway operates with a lean team. It's a testament to Buffett's belief in decentralization and empowering managers at individual companies. What are the investment strategies that have made Warren Buffett so successful? Warren Buffett, often hailed as the Oracle of Omaha, didn't just amass wealth through happenstance or fleeting trends. His journey from a humble paperboy to a billionaire investor is a masterclass in the art of value investing, long-term holdings, and sticking to what you know. First up, value investing. Buffett's mentor, Benjamin Graham, introduced him to this concept. Imagine stumbling upon a rare vintage car, undervalued and overlooked, in a neighbor's garage. That's Buffett for you in the stock market. He finds companies priced less than their true worth, much like his first purchase of Citi's Service Preferred at just $38 per share, which he later sold for a profit, learning early the pain and pleasure of patient investing. Next, long-term holding. Buffett is a firm believer in the power of compounding. He once said, "Our favorite holding period is forever." Picture planting an oak seedling in your backyard. You wouldn't dig it up every few weeks to see how it's doing, right? Buffett applies this patience to his investments, holding them for decades. His investment in Coca-Cola, initiated in 1988, demonstrates this, turning a $1 billion investment into a value many times over, all because he waited for the seedling to become a towering oak. Lastly, investing in what you know. It's like sticking to your favorite recipe when cooking a crucial dinner. Buffett invests in industries he understands deeply, steering clear of the tech frenzy even during the dot-com bubble. This principle guided him to invest in companies like American Express and Geico, whose business models he understood and believed in, leading to substantial returns. These three principles have been the pillars of Buffett's investment philosophy. They have helped him weather market storms, avoid trendy traps, and build a fortune that continues to grow. What will be the legacy of Warren Buffett? In a world where wealth is often equated with success, Warren Buffett stands as a testament to a different kind of triumph. Sure, he's one of the wealthiest individuals on the planet, but his true legacy extends far beyond his bank account. Buffett's philanthropic endeavors speak volumes about his character. He made the extraordinary pledge to give away the vast majority of his fortune to charitable causes, a commitment so massive it's hard to fully comprehend. This decision was not made lightly, but with the understanding that his wealth could create a significant positive impact on the world. His generosity has been a catalyst for change, helping to address some of the world's most pressing issues. From health and education to poverty alleviation, Buffett's contributions have touched countless lives and will continue to do so long after his time. But Buffett's legacy doesn't stop at philanthropy. His influence on the world of investing is monumental. He's not just a successful investor, he's a teacher, a mentor, and a guide for those who follow in his footsteps. He's a role model for how to lead a life of integrity, humility, and generosity. Thank you for joining Millionaire Secrets on this journey through the life of Warren Buffett. If you found inspiration in his story, remember to subscribe and like this video for more insights into the lives of those who have truly made a mark on the world.